A fixed rate business loan or a variable rate business loan? How do you choose which one's right for you? Well, stay tuned. In this video, I'm going to share a few fun facts that I think you should know before you make a decision. All right, so let's talk about fixed and let's talk about variable, and let's just break down the two, make it real simple and easy. If it's a fixed rate loan, it's very simple. The rate is fixed. So let's just assume that your interest rate is 6%. That means for the life of the loan, your interest rate will be 6% and will not change. If it's a variable rate loan, that means your rate can change. But more importantly, how does that rate change? So typically in those situations, the bank will use a base rate, and usually it's the prime rate. Right now the prime rate's at 4%. So typically a lender will either set your interest rate at the prime rate, so whatever that rate adjusts, and they'll adjust it on a quarterly basis, or sometimes monthly. Your payment will get reconfigured based on that rate. Usually, most business lenders, banks, will do prime rate plus another rate. So when you see your loan approval and it says prime rate plus 1% or 2%, that means whatever the prime rate is, whatever that adjusts to, your rate is, let's just use the example of 2%. So if prime rate right now is 4% and you have a deal prime rate plus 2%, that means your effective interest rate will be 6%. And your payment will automatically readjust to reflect 6%. It's really that simple. It's that easy. So basically know that if you have a variable rate deal, that your payment can fluctuate and go up and down. Sometimes the prime rate could stay the same for a very long period of time. We just came out of a market where the prime rate hovered around 3.25% for a very long period of time. But right now, if you're trying to make a decision, do I go fixed or do I go variable? Right now, when making this decision, what I would always do, and what I always tell my customers is, hey, what type of an environment are you in right now? A few years ago, we were in an environment where rates were coming down. Hey, if you're looking to borrow money for 1 or 2 years, if rates are kind of on the decline, really makes sense to go to variable deal. But right now, we're in a market where the rates are going up. So if you asked me, I would say probably not the best time to take a variable rate. Some lenders only offer that on the approval that you may have gotten. If it's an SBA deal, it usually always fluctuates with the prime rate, so you usually cannot, get around this. Some banks may allow you to get a fixed rate and buy it down. So some things that you want to understand is a few things. One is, what is their fixed rate option? If there's a fixed rate option, what is that option? And then what is the variable rate option? And you have to understand, and then you got to compare those two. If the fixed rate option is much less than the variable rate, it's usually a no-brainer. Take the fixed rate option, it's already lower. And you're locked in, you know what your payment is, there's never adjustment. A lot of times with the variable rate adjustment, it can be a little bit less than the fixed rate option, but you've got to understand what if that goes up. So normally what I like to tell my customers, especially if we're in an environment like we're in right now where rates are going up on the variable side. So right now, prime rate's 4%. If you have prime rate plus 2%, you're at an effective rate of 6% in total. What's your payment at 6%? You might want to calculate your payment on 6%, 6.5%, 7%, and even 8%. I think it's pretty extreme, but the rates, could go up another 2% from here. I don't know. And are you okay with that payment at 6%, 7%, and 8% if there's not a fixed rate option for you right now? If you're okay with that payment, it is what it is. You're not going to be able to control which way those rates go. And even at 6 to 8%, I still think that's a great deal in today's market. And rates are probably going to only go up from here. So if you can lock in at fixed, look at your fixed rate deal, and then you got to make that decision on what makes sense. A few other things that you might want to consider and think about, just a few bonus tips here as we wrap up this video, is one, sometimes if you go with a variable rate structure, there's prepayment penalties. Sometimes if you go to fixed rate structure, there is or isn't. So you really always want to know, are there any prepayment penalties with this deal? Can you get out of the deal? Can you pay it off early without any additional penalties? Sometimes there are prepayment penalties. It might be worth negotiating and seeing if you can get that prepayment penalty waived. Sometimes if you pay off early, there's discounts to pay off early. So if I'm looking at a deal, and I'd be talking this through with any one of my clients, if you get a variable deal and it's less than the fixed rate deal, let's say the length of repayment term is 5 years or 10 years or even 2 years, but you're like, hey, I'm looking to borrow this money and pay it off in 6 months. Well, if there's a discount to pay off early and the variable rate right now is much less, and you have plans of paying this off early, borrowing money, using it for something in your business, making it happen, paying it down and paying it off, then hey, the variable rate might make sense for you, but you want to know what can that adjust up to. Sometimes lenders will put caps in. What is your cap? And what are there penalties or discounts if you decide to pay off early? So those are a few things that I would be asking if I were in your shoes. I hope you found this video helpful. There's no right or wrong answer whether you go fixed or variable. It just matters on what makes sense for you and your business at the time of taking out financing. Thanks for tuning in to Grow by Joe. I wish you nothing but success in your business. No matter which option you choose, make sure that you keep growing. Take care, and we'll talk soon. Be well.